Hello, ladies and gentlemen. Happy Friday to you all. I'm so grateful to be here this morning. So let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice without distortion, kindly confirm that these are all good by typing hi in the comment section so that we can get this started. I would like to see some feedbacks, please. So if you can see my screen, you can hear my voice, please type in hi. Let's see how things goes and then we get this whole thing started. So what do we have here? Okay, I can see 997, good morning. 857, good morning to you too. HB1, hi, thank you. 857, all right, thank you very much. 780 okay, thank you. Hey Carrie, thank you very much. Yes, happy Friday from here. Luca Panzaru, thank you very much. Zach, thank you. All right, so I'll take this as a confirmation that we are good to go this morning. And it's on this note I welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour I'm going to be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities ahead of the New York session today. And remember, today is the last trading day of the week, and there is always a psychological expectation considering last trading days, like last trading day of the month, last trading day of the week. We normally see situations where profit-taking activity is the order of the day, and this always reflects on the chart as price action moving in the opposite direction of the prior leading price action. So we are going to be taking this into consideration while we review the market for today. And for those who are joining us for the first time, you are highly welcome on board, as what we simply do here is to gather here as a community on a daily basis in anticipation of the New York session. So we have a handful of financial instruments that we have been monitoring since the beginning of the week. So every day we come here to review how well these pairs are doing, manage our existing positions, and at the same time look out for more opportunities ahead of each New York session of the week. So this is what we simply do here, and I advise that you stay tuned in, be with us every day. It's 10 a.m. UTC, and with time you get to understand how it works, and you will be able to use the information you gathered here to make your own personal decision on your portfolio. So you're welcome once again, and on this note, let's dive right into the business for today. So you know how we do it. The first thing we want to be doing is to keep tabs with the fundamental aspect of the market, as this helps us to this helps our better timing, and at the same time it gives us an idea of what majority in the market are looking forward to, so that we can also position ourselves in such a way that we can catch a move prior to the event, during the event, or after the event. So what we simply do here is to check the economic calendar and focus on high impact event that will be affecting any of the currencies we are monitoring for the week. So we have the US dollar, the pound sterling, and the Japanese yen to look out for. So for today, May 19th, Friday, the only macroeconomic event we are going to be looking forward to today is the Fed chair speech, which is coming up in about 4 to 5 hours from now. So everyone in the market will definitely be looking forward to this event, as they want to know what Powell is going to say, and at the same time, whatever he says here has a whole lot of weight on the US dollar, and especially during this time where we have been having this wrangling for the US debt ceiling to be increased. So these are things that we are going to be looking forward to for today. And with that being said here, let's dive right into the chart to look at things from a technical standpoint. So as usual, the first commodity we are going to be looking at this morning is the US oil spot. And on the US oil spot so far this week, we have been very, very profitable on this commodity as we continue to buy the US oil spot since the beginning of the week, where we identified the $70 zone as our demand zone for this week. So let's quickly run through how the week started for us and what really incited the decision we made to buy the US oil. So at the beginning of the week, we saw this simple flat channel where price action was initially trapped within the $70.15 level and the $69.30 area. So we had this setup figured out just at the beginning of the week. And you know how we do it whenever we have this kind of simple setup. We want to see price action either break out of the resistance line for buying opportunity or break down the support line for selling opportunity. And it was the opposite that happened here as we saw price action break out of the resistance line at the $70.15 level. And during our morning live session, I emphasized how important this trend line needs to be broken to give us a confirmation of a bullish momentum to the upside, which actually happened. And on the first two positions, we saw our price action moved 160 on the first one and 130 on the second one before we witnessed this choppy situation that began on Tuesday. So on Tuesday, we identified a potential reversal pattern in the form of a head and shoulder pattern actually, as we saw this whole situation here, and we anticipated the breakdown of that neckline at the $70.91 area to join a bearish move to the downside. So we had a sell position there too as well, which moved about 90 pips in our favor before this whole bullish momentum began. So on Wednesday morning, we already had a buy position prior into the live session. So we were looking forward to more opportunities to add to our existing trade here yesterday. So we had structures like the $71.40 level. We also had levels at the $72 areas to add more position to our existing trade. And we rode the move all the way to the upside where price action hit our TP target at the $73 area. So it was quite a profitable trade for us, at least for the first 3 days of this week. Now, during our live session yesterday, we anticipated that price action could either break down or break out of the new structure. So let me zoom in so that we can see things more clearly here. So this was what we identified during the live session yesterday. We saw this channel between the $72.80 level and the $72.50 area. So it was a 30-cent channel thereabout. So we were looking forward to price action either breaking out of that structure or breaking down of that level for buying or selling opportunity. And a breakdown was what happened as we saw price action break down. And in fact, if you had missed out on that opportunity, we saw how the market came back several times to retest the structure to incite that bearish move to the downside. So we were able to see price move about 100 pips approximately in our favor before another buy pressure resumed in this market. And one thing about this whole structure that makes this whole structure very interesting is the fact that we were able to identify a potential window where the this whole bearish momentum could probably finalize before another wave of bullish momentum will happen. And what we did here was to consider the impulsive move that started on Wednesday and we said we want to see if this where this retracement phase is going to end. So we used our Fibonacci retracement tool to identify our golden zone area, which is always between the 50 and the 78.6% of the impulse leg that we had here. So we had this what's it called, this window around here where we said we are going to be looking out for reversal patterns within this area to be part of a trend continuation to the upside. And I told us all yesterday that we want to look out for patterns like double bottom structures, head and shoulder patterns, or falling wedge to be part of a move to the upside. And this was exactly what happened. If you look at what happened here since the later part of the New York session yesterday, so if we look at the impulsive move that got to this point, so as soon as price got into the $71.50 level, we saw price action climb back into the 72 area. Price dropped again, and look at what happened here. Price was unable to break the previous low and giving us a very simple reversal pattern in the form of a double bottom structure. And whenever we identify a potential reversal pattern like this, the next thing we want to be doing is to identify the neckline, which will be serving as the platform that will validate the potency of this reversal pattern. So we had a neckline which coincidentally shares a confluence with that $72 area, which you can see here, and we saw the breakout of that structure actually, and since then price action had continued to move to the upside. So since the breakout of that structure, we've had about 80 pips in our direction so far. So at this point in time, for those who are taking advantage of that opportunity, well done to you for being on standby to catch that move. And what you want to be doing right now is to secure the current buy position by moving your stop loss accordingly. And from the look of things right here, the most appropriate area I think that this stop loss could be placed now is around that $72.50 level. So it's anywhere around this area, let's move our stop loss and secure that position. Remember that area has also been a strong buying niche at one point during the course of the week before we saw the breakdown happened on Thursday. That was yesterday. Now that we have price action breaking out that level, I want to see that area as another platform for buying opportunity going forward. So well done to you for being on standby to catch that move. Now, as we are heading into the New York session today, what is going to be our plans, especially for those who had missed out on this buy opportunity? What do we intend to do here to take advantage of probably a trend continuation to the upside, or if it's possible, are we going to be seeing price action drop again to the downside? So these are the things we are going to be looking at here. So the first thing we want to acknowledge here is the fact that since price action hit our TP target here on Wednesday, had a $73 area, a very strong psychological level considering the round figure of that price, we have seen how price action has been finding lower highs in this market. And what we did here was to connect the series of lower highs to give us this bearish trend line that you can see on your screen right now. And what happened during a couple of hours ago was the breakout retest of this trend line to further emphasize the strength of the buyers. So having the breakout of the trend line happen here, breaking out of the $72.50 level, then I want to be using the $72.50 level as a yardstick for buying opportunity today. So what this simply means is that as long as price action remains above both the trend line and the $72.50 level where it shares a beautiful confluence, we shall feel comfortable in our buy position while we look out for more opportunities to add more position to our existing trade. Now, another opportunity to add more position, if you had missed out on those opportunities earlier, is the breakout of the $72.80 level. Now, look at the structure here. This level has been a strong selling niche in this market in the last 48 hours. Look at what happened here on Wednesday. We saw how sellers negated all bullish attempts in this market. And one thing about this structure is that sellers, it shows that sellers are very present around that area. So if we do have a breakout of the structure today, definitely this will be a very beautiful sign for us to be part of another wave of bullish momentum. So we are going to be looking forward to another breakout retest of the $72.80 level to join or add more position to our existing trade on the US oil spot for today. So this is what I'm looking out for to buy the US oil for today. So as long as price action remains above that $72.50 level, we feel comfortable in our buy position. We look out for more opportunities to add more position to our existing trade at the breakout of the $72.80 level. Now, in as much as we are looking out for buying opportunities in this market, it is very important that we also take into consideration the potentials of the sellers too as well. This is how we do it here. We always try to keep our options open and at the same time remain very flexible so that we can always be part of the move whenever it happens. So when we look at the structure here, like I said earlier, we have seen how that area here had been a strong selling niche on Wednesday. That was during the midweek. We saw how that area has been a strong selling niche. So we need to be very, very careful too as well. So if you have a buy position running, I've told you earlier, move your stop loss, lock in this position, as anything could still happen. Sellers could still come in from this area. Now, if we are going to be selling the US oil spot, what do we want to see on this chart that will give us that confirmation or the confidence to be part of a bearish move? Now, the first thing I would like to do here is to acknowledge the bullish momentum in the last 24 hours. So we saw that as soon as price action got into our potential buy zone here, we saw that price action had consistently found higher lows in this market. And whenever we have higher lows like this, the next thing we want to be doing is to connect it so that we can have a platform that will be guiding our trading activities going forward. So we have a trend line figured out, and one thing about this trend line is that it's also going to help us to manage our buy position currently, as if price action remains above that trend line, we shall feel comfortable in our buy position while we look out for more opportunities to add more position to our existing trade. But if during the New York session today, a breakdown of that trend line happens, then at this point we want to be considering selling the US oil spot. So if you look at the trend line here, you can see how it shares a confluence with the $72.50 level. So if price action at any point in time during the New York session we witness a breach of that trend line, at this point we want to be shifting our bias into a bearish one. But remember, we are not getting too excited at this point, as we still need confirmations to happen before we want to hop into the bearish trend. So what we want to wait out for after the breakdown of the trend line happens is to scale down into our lower time frame. It could be the 5 minutes, 10 minutes or 15 minutes time frame to look out for confirmations, which will definitely reflect on the chart as a retest of the structure that was broken. So when we scale down and start seeing retest of the trend line, seeing signs where buyers are finding it difficult to climb back above the trend line, then it is at this point we want to be thinking of selling the US oil spot. So we could sell right around that area if we have a breakout of a reversal pattern around that level on our lower time frame, or we could have a sell stop order below the $72.50 level to join the bearish move to the downside. And if we are going to be selling, that is if price action breaks down this red highlighted trend line I just identified here, we are going to be having our TP target somewhere within the potential buy zone that we identified yesterday. And if I zoom out a little further for us to see things from an holistic point of view, remember at the beginning of the week we had this bullish trend line figured out after connecting the series of higher lows here, which also shares a beautiful confluence with that potential buy zone we identified yesterday. So if it so happens that price action breaks down the trend line, then we might likely be having our TP target anywhere around this area, around this trend line. Now, depending on how price action reacts to this trend line or this window here will now determine if we are going to be adding more sell position. That is, if breakdown of the trend line happens, we would have no other choice than be part of a sell-off in this market. However, if buy pressure resumes here again, that is, we start seeing something like a double bottom structure, a reversal pattern, then we are in to buy and join the second wave of the bullish momentum. So this is how we are going to be buying the US oil spot today. So I was able to spot two scenarios here for us. So we looked at the potentials of the buyers from this current structure, and we also checked out the possibilities of the sellers. And one thing you can take home for today is that the trend line here is going to be guiding our trading activity for today. So anywhere above the trend line, we feel comfortable in our buy position, and at the same time look out for more opportunity to maximize that bullish potential. But if at any point in time price action breaks down the trend line, we look out for selling opportunities in this market, aiming at the trend line here, and depending on how price action reacts to the trend line will now determine if we are going to be adding more sell position or get ready for another wave of bullish momentum. So it's quite a simple setup we have here. So you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. If you have any questions whatsoever, feel free to let me know right in the comment section, and trust me, I am willing to be of help in that regard. All right, so in the absence of no questions, I will be moving on to the next instrument. So the next option we are going to be taking here is the US Tech, and the US Tech is another very, very profitable trade for us so far this week. In fact, the last 24 hours was also very massive, but since the beginning of this week, we have been very, very profitable in this market. Now let's quickly run through how the week started for us on the US Tech 100. In fact, we have been buying the US Tech 100 since the beginning of the week, and the market was giving us simple structures that we can easily use to guide our trading activity. So let's run through quickly how the week started for us on the US Tech 100. So we had this whole situation here where price action was very, very choppy since the beginning of the week, giving us signs that there is an indecision going on in the market. So we saw how price action was trapped within that range between the 13,390 and the 13,300 to give us a very choppy situation, and at the same time a flat channel to guide our trading activity. And you know how we do it whenever we have this kind of simple flat channel. We have no other choice than to remain patient, waiting for price action to either break out of the resistant line for buying opportunity, that is, break out of the resistant line, or break down the support line for selling opportunities. And coupled with the fact that price action was sitting on a very strong bullish trend line, which we identified on our higher time frame, things were looking very bullish at the beginning of the week. So we had the buy stop order sitting above the 1,390, which you can see here. We saw our price action broke out of that structure multiple times, retested it a couple of times to continue to push price to the upside. We joined there. We also had more positions to our existing trade, as we also identified the 13,435 level on Tuesday as another area we want to be looking out to add more position to our existing trade. So we saw this whole price move significantly in our favor into the 13,350. We saw it come back to retest structure. We added more position, and we continue to ride the move all the way to the upside. And it was yesterday, I think on Wednesday, we saw our price action hit our TP target at the 13,560 area, giving us about 130 pips. After which, yesterday's trading session, we were able to spot this flat channel that we have here between the 13,600 and the 13,000 570. And one thing we said here is that this whole structure has a high chance of inciting a trend continuation to the upside. And you know what we do whenever we have this kind of simple flat channel, we want to remain patient, place our buy stop order at the resistance line to take advantage of a buy position. And we also talked about the potentials of sellers too as well, that if a breakdown happens, we wait for a retest of structure before we join the decline to the downside, which never happened, hereby negating the bearish potential in the market at that point. So with the situation we had here, we had our buy position triggered just an hour into the New York session yesterday, and since then price action had continued to find higher highs and higher lows, hitting our TP target, and not again price action has fallen into another choppy situation, just like it has been doing since the beginning of the week. So we have a very familiar setup again right now. And how do we intend to take advantage of this opportunity going into the New York session today? Firstly, before we go into the details of how we are going to be taking advantage of this opportunity, I want us to quickly have an holistic view of what is really going on in this market, so that we can have an idea of how we got to this point and why we are making the decision we are going to be making on the 1 hour time frame. So in that regard, let's scale up a little bit into the daily time frame. Let's see what is going on from an holistic point of view. Now, if we look at the daily time frame here, you will see how the buyers had continued to massively take advantage of the sellers in this market. Now, since the beginning of this year, we have seen our price action had consistently found higher highs and higher lows. And to further emphasize the strength of the buyers in this market, we connected a series of higher highs and higher lows to give us the simple ascending channel we have here. And since the beginning of this year, we have been using this channel to guide our trading activity. Now, something interesting happened during the month of April here, where we saw price action breaking out of that key level at the 12,800 for the first time this year. And then it was at this point we had a platform for another bullish momentum. And if you remember vividly, since we've been monitoring this option for the last couple of months, we remember we had our maximum TP target around that 13,800, which has finally been hit. And if we go to the past year, you will see how that level has been a major determinant of price action. So if we go to as far back as last year, January of last year, we see how that area around the 13,800 has been a major significant level here that has been determining how price action is playing out in this market. Now, one thing you will notice here is that price action is right at that level, making this a critical point at this point. So anything could actually happen from this area. We could see sell pressure resume from the 13,800 to push price to the downside, and we could still have price action breakout of the 13,800 to push price to the upside. So it's very important that we remain conscious here to see how the market will be reacting to the structure. So we already have a little breakout of this 13,800 here. Now the question here is, will this turn out to be a true breakout, or is it going to turn out to be a false breakout? So if it's going to be a true breakout, then definitely a breakout by pressure above this level will confirm this as a true breakout. Whereas if price action drops back below the 13,800, then at this point we might be in for a long bearish move to the downside. So to get a better perspective of what is going on here, we need to scale down to a much lower time frame. So I will first of all go into the 4 hours time frame before we dive into the 1 hour time frame, which is our execution time frame. So I would like to extend this trend line a little bit, as it has been guiding our trading activities since the last couple of months. So this is the 4 hours time frame, and it's quite obvious that price action has been bullish, and we have a trend line to emphasize the bullish momentum actually. And this week we have seen massive traction in the price action moving to the upside, and as you can see, we have a very strong bullish momentum. And at this point, you would agree with me that a retracement phase seems long overdue in this market. And the reason why I've said this is this. Let's look at it from a psychological point of view. Now, for those who had bought the US Tech 100 at a very cheap price, let's say around the 13,300, and bought it and stayed in that position all the way into the 13,390, definitely at one point they want to be doing some profit taking activity, especially on a day like this, which is the last trading day of the week. People are going into the weekend, and we never can tell what could happen. We could have a gap, bullish gap or bearish gap at the beginning of the week. So majority will want to be taking out some of their position, which is going to be reflecting on the chart as a retracement to the downside. How far that will be is what we don't know at this point, but we still have a structure around the 13,600, and we also have a trend line that will be guiding that if we do have price action retrace to the downside in anticipation of another wave of bullish momentum. So what to do right now is this. We want to be scaling down into the lower time frame, that is the 1 hour time frame, to see how participants in this market is going to be reacting to the structure we have here to determine what our next line of action will be. Now, when we scale down into a much more lower time frame, like the 1 hour time frame, things become a little bit more clearer. So let me zoom right in and let's focus between this area. So we have a consolidation phase. So this is where our central focus is going to be for today. As we can see, price action is currently trading between the 13,390 and the 13,835, giving us a flat channel. And you know how we do it whenever we have flat channel like this. We are not going to be doing anything, waiting patiently for a signal, which will come either in the form of a breakout of the 13,900 level for buying opportunity, or the breakdown of the 13,835 for selling opportunities. And like I shared on the higher time frame, that a retracement phase seems long overdue in this market. So what we are going to be looking at is the breakdown of the 13,835 could likely incite a sell-off in this market. Now, what we are going to be doing here to sell is to see price action break down the structure, and as soon as we have a breakdown of that level, we want to be scaling down into our lower time frame, our 10, 15, or even as low as our 5 minutes time frame, to look out for confirmation, which will reflect on the chart as a retest of structure, where we see signs that sellers are gradually gaining momentum. Then we can join the bearish move to the downside. So that is how we are going to be selling the US Tech 100 for today, and we shall be seeing this as a retracement of the impulsive move that started this week. Now, that is what we are looking out for selling. In as much as we are having a bearish perspective that we might have a retracement, we should not ignore the potential of the buyers. And considering the fact that it has been a strong bullish momentum since the beginning of this week, the whole flat channel we have here could turn out to be a trend continuation pattern, probably in the form of a bullish rectangle. And if this is going to be the case, what we are going to be seeing here to confirm this as a bullish rectangular pattern is a breakout of the resistant line at the 13,900 to join the trend continuation to the upside. So what we are going to be doing here, I have a buy stop order above the 13,900 to be part of the bullish move if it so happens that price action breaks out of that structure. So these are my views here on the US Tech 100. If you do have any questions regarding what I just explained so far, feel free to let me know in the comments section below. So it's a simple setup we have here on the US Tech 100. You can map that out on your chart or screenshot my screen so that you can use it as a reference point to make your individual decision on your portfolio. So with that being said here, I'm going to be moving right into the next option, the next instrument for today, which is the XAUUSD. And on the XAUUSD, we have quite a profitable situation here. We have been selling the XAUUSD since the beginning of this week. Hold on a second, please. All right, sorry about the break in transmission. We are back on. Okay, so let's quickly run through what the week looked like, how we have been selling the XAUUSD. Then we will go into what we are going to be looking at today. Now, look at what has been happening since the beginning of this week. Remember, at the beginning of the week, we had our key level, which was situated at a $2,020 area, which was supposed to be serving as our yardstick for trading activity for the week. And you know what we do with our key levels, it tells us if we are going to be buying or selling. So if price action remains above our key level, we look out for buying opportunity, and if price action drops below our key level, definitely we are going to be looking out for selling opportunities. And coupled with the fact that we had a key level at the 2020, we had this descending channel also figured out at the beginning of the week. So we were using this trend line 2 as our yardstick to guide our trading activity. Now we saw this old chopper situation happen around the $2,020 level here at the beginning of the week, where we saw continued selling pressure just right along the resistance line of that descending channel and even below our key level as well. Then another thing that we did here was to acknowledge the bullish trend line. And what we said here on Monday was that this trend line here will guide our trading activity. So if price action remains above the trend line, we look out for buying opportunities. So what we said we are going to be looking forward to buy at the beginning of the week was the breakout of the resistance line, retest of the structure to be part of a continuation to the upside. And note this, that if a breakout of that 2020 happens, price action would have broken out of that resistance line of the descending channel, which will have been the first time price action will break out of that structure. But unfortunately for the buyers, this never happened, as you can see here. And we also included in our plans that if the breakdown of that trend line happens, we are going to be getting ready to sell. And as a result of this, remember, we mapped out this $2,014.50 level as a line that we are going to be using to sell, that if a breakdown of the trend line happens, we want to have a sell stop order below the $2,014.50 level to join that decline to the downside. And as you can see here, we have been riding the bearish move all the way to the downside, even having multiple entries in this market, as we had key structures like the 2008. We also had a $2,000 level, which was broken for the first time in the last 8 weeks. Then we also had structures at the 1,986, which was also broken. And yesterday we had another breakdown of the 1,980, which we also marked out during our live session yesterday to be part of a bearish move to the downside. So it was quite a very profitable trade for us on the XAUUSD this week, and congrats to everyone who has been part of this profitable journey. So now that we are heading into the New York session today, what is going to be our plans? What are we going to see on this chart? Are we buying or are we selling the XAUUSD today? Well, let's quickly run through what has been happening here in the last, let's say 12 hours, I think. And one thing you will notice is that as soon as price action got into that area around the 1,952, we have seen how this area has turned out to be a buying niche, as we saw multiple rejections, sellers finding it difficult to break through that structure, giving us a reversal pattern to push price to the upside. Now, another thing I would like to call our attention to here was the breakdown of the support line of that descending channel yesterday. And you all know from a technical standpoint that whenever price action breaks down a structure, there is a chance that price action could come back, retest the structure to incite another wave of bearish momentum. That is one perspective here. Or price action could even come back, climb back up into the resistance line of the descending channel before another wave of bearish momentum, or it could even break out of that structure to incite a bullish momentum to the upside. So these are all the perspectives that we are going to be looking at in details right now, and how we are going to be positioning ourselves ahead of the New York session. Don't worry, it might look a little bit complicated, but I've tried to make it as simple as possible. So in that regard, I had to do a new setup for us on a new chart so that we can have a very clean chart to work with. So right now I had to bring this out this morning after monitoring how price action has been playing out since the beginning of the week. So I have a couple of trend lines here which I've used to emphasize the bearish momentum in this market, as you can see here. So we can see we have a zone here which has been a strong selling niche. So as soon as price gets into this zone, we saw how sellers jump in to negate all bullish attempts in this market. Now, in addition to this trend line, I couple a handful of key levels here. So I have a $10 range between these key levels. So we have the $1,950, $1,960, and the $1,970. Now, this is the lowest point price action has been in a long time. That's the $1,950. And what we saw here was quite interesting, as we saw a reversal pattern in the form of a double bottom structure. So as soon as price got into the 1,950, we saw it climb back into the 1,960. We saw another move to the downside. Price was unable to break the previous low, and now we had a higher low, which from a technical standpoint is a sign that buyers are gradually gaining momentum. And in addition to that is the fact that we have a potential reversal pattern in the form of a double bottom structure. And you know how we do it. Whenever we have this kind of reversal pattern, the next thing we want to be doing is to identify the neckline for that reversal pattern, which is interestingly sitting along a strong psychological level at the 1,960. And what we saw during the early hours of today was a breakout of the neckline, retest of that structure, giving us signs that buyers are gradually gaining momentum, and we might likely see a bullish momentum to the upside with the way things are going. And in order to be able to capture that move, what I did here is to place a buy stop order. Of course, we are quite profitable this week, so we could still afford to risk some of the profit we have made to test waters here to see if things is going to be working out well for us. So we have a buy stop order above the 1,970 here to be able to catch that move to the upside if price action continues up. And one thing about the 1,970 here, which I would like to call our attention to, is the fact that it shares a confluence with our trend line. So there are two things that could happen around this area. We could have a breakout of that structure, or we could have selling pressure come in to push price to the downside. So let's talk about the buying potential in this market first of all, then we talk about what to look out for if it is going to be bearish in this market. Now, the first thing we are going to be talking about is the bullish expectation, of course. And what I did here was to connect the series of higher low, at least. For in the meantime, we have a temporary bullish trend line, which we are going to be using to guide our trading activity for today. So as long as price action remains above that trend line, we feel comfortable in our buy position. And like I said, we are looking forward to break out of the 1,970 to trigger our buy position. And it's possible price will do some retest of structure, coming back into the trend line to incite more opportunities to buy the XAUUSD, where the further breakout of that trend line there will welcome additional position to our existing trade. So this is what I'm going to be looking out for today, to be in a buy position in this market. Now, in as much as we are having a bullish expectation as in this market, we are going to be looking at the potentials of sellers too as well. Now, for selling the XAUUSD, what do we want to see on this chart that will give us the confidence to change our bias from bullish to bearish? Now, look at the structure here. We have the 1970, which shares a confluence with the trend line, remember, and price has been respecting that trend line for quite a while now. So if price action gets into that area and we begin to see selling pressure around that level where buyers are finding it difficult to climb above the 1970, then it is at this point we'll start considering selling the XAUUSD. And we are not going to sell until a breakdown of this bullish trend line happens. So if price action breaks down the red highlighted bullish trend line, then it is at this point that we have known that this trend line may no longer have the capacity to negate the bearish attempts in this market. So we get ready to sell. So we scale down to our lower time frame, look out for retest of structure. Then we have the opportunity to be part of a bearish move to the downside. And in fact, this bearish expectation here has a tendency of giving us multiple entries, as we have structures like the 1960 and the 1950, where breakdown retest of the structures will welcome additional position to our existing trade. And we have a TP target around the 1940 for this bearish expectation. Let's see how price action plays out in the next couple of hours. And remember that we have an high impact event coming up in about 3 hours from now, and definitely majority in the market will be anticipating this event. And prior to this event, or within the event, or after the event, there is a high chance that we shall be seeing some volatility in this market. So we want to position ourselves in such a way that we are already in this trade before the volatility begins. So let's be on standby. Screenshot my screen. This simple setup here is what we are going to be using to guide our trading activity for today. So I wish you best of luck on the XAUUSD. If you have any questions, feel free to let me know right in the comment section. So I will be moving on to the next instrument, which is the GBPJPY, which was introduced to us by someone within our mains here on Monday. So let's quickly run through what our expectations were at the beginning of the week, what we were looking out for, and what guided our decision on this currency pair. So right now, at the beginning of the week, we acknowledge the fact that price action has been bullish. So this is the daily time frame you have on your screen right now. And you can see after connecting the pivot lows, we have a beautiful trend line, which has been supporting that momentum to the upside. Though we had a breakdown at one point, I think in the month of March, but if you look at the nature of those weeks, it shows that buyers are really strong, as we had sharp rejections of that area, bringing price back above that trend line. Then in addition to that trend line is that key level we identified had the 168.00 area, which has been a major determinant of price action since April. So we saw the breakout of this structure on the last trading day of last month, and since the beginning of this month, we saw how that level had been rejecting every attempt by the sellers to break down the structure, giving us a clue into the strength of the buyers in this market. Now we have a peak here at the 172. Let me mark this out. So 172. So we have a peak here which we saw selling pressure. And at this point, we can see that price is currently trading around that area, and we have been witnessing some multiple rejection of that level in the last 48, 60 hours in this market. And we might likely see price action from sell pressure around that area to incite a bearish move, or a breakout of that level could give us an opportunity to add more position to our existing trade. So now let's scale down into a much more lower time frame to see what is really going on here, and also how we took advantage of this opportunity yesterday. So when we scale down into the 4 hours time frame, we had the privilege of identifying a bullish trend line. So we had this structure mapped out. So since last week, we saw this our buyers had continued to find higher highs and higher lows in this market, giving us a trend line. And as you can see, at no point in time have we seen price action break down that trend line, giving us a clue that buyers are very strong in this market, and we continue to look out for more opportunities, which it might lead into the breakout of the 172 area, which I'm of the opinion after the breakout of that level, the move is going to be very, very massive. Now let's scale down to the 1 hour time frame, where we begin to see things more clearly. So we have been buying since the beginning of the week. We rode the move all the way to the upside, and right now you will see our price action has remained within a choppy situation, just right within the 172.00 area and the 171.200. So we are going to map this out, as this structure here is going to be our yardstick for trading activity today. So I want to mark this 172.200 area out, as we are going to be using this as a parameter to guide our trading activity today. So we have 171.200 area. All right, and then this is the 172, I think. Okay, so we have a flat channel right now, and price action has been ranging within that area in the last 48 hours. And you know how we do it. Whenever we identify this kind of simple flat channel, we want to be as patient as possible, waiting for a signal, which is going to come in the form of either a breakout of the 172 to give us buying opportunity to the upside, or a breakdown of the 171.200, which also shares a confluence with our trend line to incite a sell-off in this market. Now, with the situation of things right now, I am of the opinion that price action's chances of breaking out of the 172 area is about 70% compared to the chances of breaking down the 171.200. So with this situation here, I'm going to be having a buy stop order anywhere above the 172.00 zone, with the hopes that price action will continue to the upside, with a stop loss sitting somewhere just right above the 171.200, with about 60 to 65 pips stop loss in that regard. And let's see how far this bullish momentum will go. So buying above the 172.00 level is what we are looking out for today. Now, in as much as we have in the bullish expectation in this market, we also want to consider the bearish expectation too as well. Do sellers have any say in this market at all? Do they have any chances of pushing price to the downside? Well, we never can tell, but the structures we have could give us an insight into the potentials of the sellers. Now, the first thing you will see on this chart is that as soon as price action got into the 172.00 area in the last 72 hours, we have been seeing selling pressure from that area, giving us a clue that presence of sellers around that area is very strong. And if buyers find it difficult to break out of this level, then we might likely see a sell-off come in at any point. But what are we going to look out for here that will give us the confidence to sell the GBPJPY? Well, we already have a trend line which we have been using since the beginning of the week, and this line has been guiding our bullish momentum. So far so good, and unless a breakdown of this trend line happens, we maintain our bullish buyers in this market. So what we are going to be doing here to sell is to see price action breach that bullish trend line, break it down, then we look out for retest of structure confirming the potentials of sellers here. Then we could join the sell move to the downside, and we could have more positions at the breakdown of the 171.200 area, then continue to ride the move all the way to the downside. So this is what we shall be looking at on the GBPJPY to sell this one. But I'm of the opinion that price action's chances of breaking out of the 172.00 area is still very strong, considering the long-term bullish momentum we have been enjoying in this market in the last couple of months. So let's see how things plays out. Map out this on your chart, screenshot my screen if you want to, so that you can use it as a reference point when you're about to make your individual decision. All right, so if you have questions, let me know in the comment section while I move on to the last pair for today, which is the USDJPY. So on the USDJPY, in fact, the USDJPY is the most profitable trade for us this week, sincerely speaking. So we have been buying this pair since the beginning, I think since Tuesday of this week. Though it was a little bit lethargic, things were very, very slow at the beginning of the week, and not until Tuesday's New York session we begin to see some bullish traction in the favor of the US dollar. Now, at the beginning of the week, we saw this old chopper situation where price action was trapped within the 136.260, as you can see here, and the 135.700. So within this whole scenario, it lasted about 24, 36, 40 hours. We had price action within that range, and this might be as a result of the expectation of the RSI, as in the retail sales on, is it on Tuesday or Wednesday we had the retail sales. So this was our expectation of that. So we had this indecision going on in this market. And one thing we did, you know how we do here, is that we want to see price action either break out of the resistance line or break down of the support line for trading opportunities. And on Tuesday New York session, we finally saw the breakout of that structure. And in fact, if you had missed out on that opportunity, the market presented to us another chance to be part of that move as it came back to retest that structure. And since then, price action has been finding its way all the way to the upside. And interesting enough for us, we also identify key levels where we are going to be adding more position to our existing trade. So we had key levels like the 136.650, we had the 137.200, we also had the 137.700. All these levels were key levels that we added more position as we rode the move all into our TP target at the 138.400. So it has been quite a profitable trade. So we had a minimum of 3 or 4 positions in this market during the course of the week. So we were able to scoop over 500 pips, 600 pips in profit. So congrats to everyone who had been part of this profitable trade. Now that we are going into the New York session today, what is going to be our plans? How do we intend to take advantage of a potential trading opportunity today? Well, we have a situation right here that we can use to guide our trading activity. Now, the first and first here is the fact that as soon as price got into that 138.750, we have been witnessing some selling pressure around this area, negating the continued buying pressure in this market. And this led to one interesting thing that happened this morning, and that was the first time price action will be breaking down this trend line. And if you go back again to the beginning of the week, you will see how that trend line had been a major determinant of our bullish momentum so far this week. So you can see at no point in time did we see price break down that trend line. So it was a very strong trend line where price has been respecting it throughout the course of the week, and not until this morning that we saw how price broke down that structure. And in fact, we also have a key level that also shares a confluence with that trend line at the 138.300. So right now, going into the New York session today, we have 2 or 3 key structures we are going to be using to guide our trading activities going forward. Now, the first one is this trend line that was broken. The second one is the 138.300, and the third one here is the lower highs I was able to map out here to give us this red highlighted descending trend line you can see on your screen right now. So this is what we are going to be using to guide our trading activity for today. Now the question is, how are we going to use this trend line to guide our moves for today? Now that we have a breakdown of this trend line here, you all know from a technical standpoint that whenever price breaks down a key structure, there is a chance that price action could come back to retest the structure. Now we have the 138.300, we have the bearish trend line, and in fact we have the bullish trend line that was broken to the downside. But what we are going to be looking for here to be part of a bearish move is to see price action transition into a reversal pattern. It could be a double top structure, a head and shoulder pattern, rising wedge, lower lows, lower highs, whatever case it may be. If it forms up on our lower time frame, then we are going to be getting ready to sell. We could have a sell stop below the 138.300 as soon as price action tests the structures. Then we want to join the bearish move to the downside. And for me, if the bearish move continues, I want to be seeing this as a retracement of the impulsive move that started this week. Now, if I zoom out of the structure so that you can have an holistic view of what has been going on here since Wednesday of last week, you will see that price action has been bullish, and we already have a trend line here which has been supporting that momentum since last week Wednesday. And if it so happens that the sell pressure that just projected now happens, we might likely be having that area along the trend line here as our TP target. Now it depends on how price action now reacts to that trend line that will now determine if we are going to be adding more sell position or probably get ready for another wave of bullish momentum. So a breakdown of the trend line will welcome selling opportunities, while the appearance of buy pressure on our lower time frame will welcome buying opportunities in this market. So that is how we are going to be selling the USDJPY for today. So as long as price action remains below the bearish trend line that we just spotted here this morning, we feel comfortable in our sell position and look out for more opportunities to be part of the bearish move. So that is how we are going to be selling this one. But if at any point in time during the New York session today, price action breaks above the trend line at the 138.300, then at this point we might likely be seeing the beginning of the second wave of the bullish momentum. And remember, when price breaks out of the bearish trend line here, we are not jumping into conclusions, as this could turn out to be a false breakout. So we need further confirmation that will help us to validate the strength of the buyers in this market. So what we are going to be doing now is to wait for price action to do some retest of structure. We see signs that buyers are getting stronger, that sellers are unable to break back below the trend line. Then at this point we are going to be joining a bullish momentum. Now a breakout of the 138.750 will welcome more opportunities in this market. So we have a buy stop order above that area to capture that move if price action ever breaks out of the 138.750. So these are my views here on the USDJPY for today. I hope I made myself very clear, and I hope you are able to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision for today. And remember, we have an high impact event coming up in about 4 hours from now. That is the first chairman speech. So every open positions must be well secured. Move your stop loss accordingly, lock in some profit, secure your position, as the chances of volatile move happening is very, very high. And we also want to ensure that we will be on standby for all the positions we were able to review today, the structures we were able to review today, so that you can catch that move when it finally happens. So it's on this note I wish you best of luck, and then I wish you a wonderful and beautiful weekend, as I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well and we are going to be preparing for the new week. Do have a wonderful evening, everyone. Bye bye.